Banks and institutions are the ones that control the market. In this video, I'm going to pull back the curtains and show you exactly how that works and know what's really going on so you can look and trade with them yourself. So let me hop in the screen share, show you why 90% of you guys watching this video are losing money and how you can become part of the 10%. The first thing I want to look at is Boeing. Okay, now I want you guys to understand something very simple, right? A very, very classic retail pattern, or what everybody knows, is the classic bull flag or the breakout trades, okay? Where you have a consolidation, whatever it is, and then we have a nice little high, and the price breaks out right through it, okay? Now, you can see this on Boeing, right? And a little bit of a longer term perspective. You can see we have this nice massive move higher. Let me get rid of that. Nice massive move higher. We have this huge consolidation, and right here, price is about to break out. And you can see as price goes to break out this high, it ends up not breaking out, okay? We try and we just end up reversing immediately. So let's think about what's really happening here. While this is going on, this entire consolidation is going on, you have a lot of people who are buying, a lot of people who are selling. A lot of people who are buying, waiting for that breakout. So you have players on both sides of the markets at this point. So when price does end up go to breakout, what do we expect to happen, right? We have shorts who are in this market who need to cover their positions, right? They most likely are going to have their stop above this high. So we have a bunch of stop losses up here, right? From the shorts. We have a bunch of people who are long who are going to be either adding to their position, or there's going to be a bunch of new retail longs who are going to be buying this breakout, okay? You can see that with the increased volume as price starts to come and break out through here. Now, if we have a lot of shorts who need to cover, and for them to cover, they need to buy the market back up, and we have a bunch of new longs buying this breakout, then we would expect price to just rip right through, right? That's a ton of buying power. Like who would be selling up here, right? Why would you want to be selling up here? And it's interesting because after all that buying, price just does not follow through, right? Price just immediately dumps right after. And the reason for that is because institutions are on the other side of this market right here. Those are the ones that are selling up here and getting short, okay? Because you got to understand, like we talked about, there's tons of people who are buying in this area, right? As price is breaking out, there are lots of buyers in this entire zone. But price doesn't go higher because somebody is sitting here holding the fort. They're basically saying, no, I'm just going to keep selling and selling and selling and hold it down, okay? Because they need to get out of their long positions, and they may want to be entering short positions. And that's exactly what happens. And then price ends up immediately reversing the other way. And you can use this in your trading to your advantage. Let me show you another example in TWLO. Right, same thing. We have a beautiful looking bull flag, right? We can even draw a nice little trend here. We can draw a little flag in, right? Beautiful price action. Nice rise higher, bull flag consolidation. Price is starting to grind up. And look at this, boom, boom, boom. We're about to get that breakout, right? Everybody's looking to buy, and we get stuffed. We go up like 2 points, and we immediately dump right after it. And the reason for that, again, is because, logically speaking, you have people who are short in here. You have people who are long in here. You have new retail longs getting in here. You have old retail shorts that are covering here. And again, in order to cover their short position, you need to buy, which drives more price. So we would expect price to squeeze higher, to push higher very fast, but it doesn't happen. And when it doesn't happen, when something that should happen doesn't, that's how you know institutions are on that play and the market is going to reverse in the other direction, okay? So simply put, the way that you trade this and trade with them, essentially wait for the false breakouts, okay? False breakouts are some of the best trading plays to do. I love them. I trade them all the time. Okay, this would be a perfect example, right? So again, we have this bull flag. We have the understanding that retail is going to be looking to get in long, buying this breakout here. And if we zoom in on like a 30-minute chart, you can see price just goes through and immediately dumps. And at this point, we can say to ourselves, you know what? We have the next point as well, think about it. You have a bunch of people who just bought up here. You had shorts who covered. You had a bunch of new longs that were coming in to buy this breakout. And so if a bunch of people are long here and price goes back down, they're now trapped. They're trapped in this area, right? You have a bunch of people who bought, a bunch of retail people who bought, who are now trapped underwater, and they're just looking to get out break even. And what happens is if price just keeps going down, you know, the retail mind is they just don't want to lose any more money. They're going to stop out. They're going to keep losing. And as price keeps going down even more, they're going to sell their positions for a loss. And that itself is going to drive price to go in the opposite direction as well. Okay? So when you start to see this occurring, start to see this happening, you can then say to yourself, hey, maybe this would be a good idea if I just, you know, went short, put my stop above the highs, target down at the lows, target liquidity down here at the lows. Okay? Very simple to understand. You can see how price simply goes from high to low. Okay, we have a low here, we have a high here. Price took the high, took liquidity, right? All the stop hunts that were triggered were people who were buying, and then the institutions shorted using all of that liquidity. And then where did they bring price? All the way back down to this low, where you can bet a lot of people had their stops as well. We took the stops, and they ended up reversing it the other way. That's just how markets move. And if you can learn to trade with them, you can make a lot of money. Now, let me show you another few examples. Let me show you an example on PayPal, okay? This is some crazy stuff here. If you look at PayPal, I'm not sure what happened there. Get rid of that. Okay, we look at PayPal. We don't need the volume right now. Look what happened right at the all-time highs. This thing went from, you know, $100 to $300, all the way back down to 70. Now, if we look at this, stay with me for a second. We come right up, we take the highs just by like a few points or a point, and we just immediately dump. And so let's think about this logically, right? Everyone's making new all-time highs. Things are looking good. Economy's all bullish. Price comes up, right? People are trading this breakout. PayPal, new all-time highs. And so you have a bunch of people who are buying down here that are looking to get this breakout, and price doesn't break out. And so when price doesn't break out, now you have this entire area of traders who are long that are, you know, buying in this area, and now they're underwater. Price is all the way down here, and they are freaking out. They're screwed. They don't know what to do. So when price comes back up to their break-even position, they sell, break even. That's what a lot of retail traders like to do, and the price goes the other way. And you can do this day in, day out on so many different stocks. Look at Roku. It's the same exact pattern. Look at this. All-time highs, right? Roku extremely bullish, 73 all the way up to 480. Pulls back, comes back up, right? We got that nice, you know, you can call it like a cup and handle pattern, right? Beautiful kind of cup and handle. You know, the retail trading patterns, and then price comes up. What do? We take out the highs, we wick buy it on one day, and then we immediately reverse. And so every single trader that was buying in this area, buying up here, buying the breakout, is now screwed. They are now holding a bunch of long positions. Price has gone down below, right? We're able to break this demand zone. That's a good sign that sellers up here are now in control. When you see that happen, that's when you want to look to go short, okay? And doing this, you can really understand the retail and the institutional logic just by simply understanding stop hunts and liquidity, okay? I'll show you another example on Home Depot, right? Home Depot, same thing. All price does is goes from highs to lows. We have this nice little consolidation period here, okay? Beautiful consolidation. We have some, you know, resistance, some support down here. And you can notice, if I draw on the support, draw on the resistance, we go up, we take that resistance area, right? Trap a bunch of long traders, same thing. We come back down. And then on this day, earnings, right, we gap down. Home Depot announces earnings. Maybe they're not so good. Price gaps down. Everyone becomes bearish. Everyone who is long in this area, in this 280 to 300 mark, right? Everybody who's long here most likely has their stop down at this low. It's a very logical stop to have. And so price goes down. We take out that stop, right? Everyone who bought now has to sell. And if there's so much selling going on, if everybody's selling and bad earnings and new shorts come into play, you would expect price to tank. And when price doesn't tank, and we just scoop right back inside, right above 280 again, you bet institutions were buying all of that selling down here. They were just scooping all of it up. And then eventually, price goes back up. We pull back right into their position again, right into this demand zone, and then price just goes and skyrockets all the way higher. Now, if you can understand these highs and lows, understand these stop hunts, understand what's really going on, you can make a lot of money trading simply by following and understanding this method. So if you guys learned something from this video, please leave a like, subscribe, comment down below other videos I should make. I'm pumping out so many more videos coming the rest of this year, showing you live trade examples, detailed educational videos, relative strength, a lot of interesting concepts that I don't talk about on Twitter or on my YouTube. So I'm going to bring all of that to you guys. So make sure you subscribe, have the post notifications on, leave a like, and comment what you thought about the video. And I'll see you guys in the next video.